Okay, everyone, good morning and welcome to the European Crossover webinar. And sorry for the delay. I was up pretty late in Asia, and Blake, surprisingly, he was up pretty late himself. He had actually taken a short in the euro. I don't know whether he kept it or not, but we were both up pretty late. Then after that, my mouse froze. I'm thinking, okay, the batteries had just gone out to replace the batteries, and I had to reboot it. And it still wouldn't come up. And I kept doing it. And I actually went into garage looking for a mouse. I had some mice, but no, didn't have the little, I don't know, what do you call it? The little wire, the little key that you plug in. And I've messed around with this thing. I thought I was going to have to try and do the webinar from the MacBook. But anyway, that being said, eventually, after trying several times and even moving the little, what do you call it, the little wireless key, it still wouldn't come up. And eventually, I did get to go up. So, but anyway, I didn't even get a chance to go and do the analysis or whatever. So we're going to get started with that. Bear with me. Let me go on and pop in the Reuters for the news feed. So bear with me. I actually thought I was going to have to go to a computer place we have in town called Altex and go there at 9 o'clock in the morning, try and buy myself a wired mouse, which I do need to pick up just as a backup for when something like this happens. Bear with me. Okay, so let's go and start with the news, and then we'll go. We already know where the euro's gone, and we'll go and touch on that. The dollar heads to the biggest monthly drop in a decade as the virus fuels the U.S. economy fears. The dollar extended its dramatic fall on Friday, putting it on course for the biggest monthly drop in a decade as investors fretted that a rebound in the U.S. economy would be derailed by the struggle to stem the U.S. coronavirus epidemic. Weakness in the U.S. currency propelled the euro higher, with the single currency touching 119, its strongest rally since May of 2018, and enjoying the best month since September 2010. Confidence in the U.S. currency was undermined after U.S. President Trump on Thursday raised the possibility of delaying the nation's November presidential election. That's one of the things that I brought up with Blake when we were, as I said, he was up pretty late himself. And he actually was short the euro. I think he sold it he said like 1903 or something like that. I didn't take on a position there, because one thing, we're coming into Friday, but if you saw my comments at the time, that was before my mouse locked up, I go, this move is all because of this fool's tweets. And I think Blake was thinking I was talking about somebody. He said, whose tweets? I missed it. And I was saying, I'm talking about, Trump's tweets about, delaying it. And he was saying, well, he didn't think it's so much the delay, but the risk. Well, yeah, that's it. I mean, the risk that, the election goes through and we don't even have a government, because you got one that's potentially of one, and then the other one saying, well, I'm not going to get out of power. And actually I had tweeted, let me go over here. I'll pull this up here. So I tweeted this last evening from I had mentioned from earlier in the morning, which was this morning. I mentioned about how the buck could eventually slide over time with this moron's tweets about delaying the election. We're going into the weekend, and since the hullabaloo, the buck can't buy a bid. A lot of folks attributing the extended slide to just that. And that's what we're saying here. What it's saying right here is that's what really kicked it off, because at the time, remember my from the FOMC, the low that I had for the cash dollar index was 93.17, and the low was 93.18. We'd actually dipped, and we were coming off of that. Yesterday, they tried to make a move back down there again, and we were trading it, I think, around like, I think it was like 93.39 or something, I believe. And then he comes up with this whole thing and really got people stirred. And before you know it, we just started, begin to slide a little bit more. And then before you know it, the doggone euro it's just not pairing back. And right now we're at, let me see. So I was just looking at the futures, because I always pay attention to the futures. We're at 1872. So we are coming off a little bit here, but that's after we actually, since Asia, we actually rallied a little bit higher. But anyway, nonetheless, says that came on the same day advanced gross domestic product data showed the contraction of an annualized 32% in the second quarter, the quickest pace after the Great Depression. Unicredit analysts said that they continue to expect the dollar weakness to persist in August, a month in which abrupt moves in the intraday activity tend to be more likely to be on lighter market conditions. However, given global economic growth concerns, worries about COVID developments, and depreciation of the U.S. dollar have already suffered in the past few weeks, we think the downward pressure on the greenback over the coming months will be less intense than it has been recently. But anyway, nonetheless, let me just go and move this out of the way. One of the things that's made it tough, and let's go and pull it here. As we come into a Friday, and we've already had this relentless movement, I'm actually looking at it on a weekly chart right here. It's hard to go and step in on a Friday and try and take the other side, especially the way it was going in Asia. I mean, once we got past the U.S. session and you opened up in Asia, it was just a steady climb higher. We're going and bounce into that real quickly. You can see here it was just up, and it just wasn't even giving back. And then it really just started to move in higher. And then, like I said, and we're looking right now on the 30-minute chart, it wasn't that long ago that we even got up here to, what was it, 1908. Actually, at the time when me and Blake were talking in Asia, we'd gotten as high as, 1904. Blake pretty much sold the top. I think he sold it like at 1901 or 03. But you can see here, it wasn't giving back. It was still holding. And just not that long ago, we popped all the way up here to 08. We're coming down. And when I looked at my own analysis, which, like I said, sorry, when my mouse had completely locked up and it wouldn't get going, even after I rebooted several times. I didn't get to complete my analysis. But one of the things I looked at when I was in Asia was this level here was up at 1937, and I posted in the room when I was talking to Blake, I said, hey, look, I'd have felt more comfortable if we had popped up to, let's say, the 1930s and then went back at around 19. Then I'd feel like as if we blew some of these stops. But when we were making those runs up in there, the volume, we got some pops, like I said, when we got up above 19 in Asia. I think we had like, I think it was 1,200 contracts. It was an okay amount, but it wasn't anything like really, go back in here. In Asia, hold on. Okay, so here where we were, and I'm looking at the 6E, and you can see here, well, we actually had a pretty good little move here, which wasn't even bad. It was 2,000 contracts, but it wasn't like anything like where they really blew it off and we really took off. Matter of fact, when we set it in, you can see here it was still holding up. It's still holding up very, very well, but it wasn't as if we really blew out like it. Once we got past the 119 area, I would expect to see something like maybe 3,000 or 4,000 and say, oh my goodness, now Not only we got stops going off, we also have them going the other direction. But you can see how long we held up in this area. Matter of fact, if you look in here, once we hit past here, we'd only dropped off about, what was it, maybe about 12 pips, maybe, and that's after almost 2 hours. But this is when I didn't even have a mouse to even work with. But anyway, getting back here, I'm like, I'm not going to go on and take my try and step in front of this train. One of the things that I had looked forward to or looked at, we'll get to that. Hang on. Was here in the NASDAQ. And we'll go and touch up on those. And we saw these stocks like Apple, Amazon, Facebook really take off, and they had not let up in any way with respect whatsoever. We'll get to that. So I'm like, I was thinking it was going to be a very active Asian session for me, and turns out not being as much because of the huge moves we saw in these equities in their earnings reports. We come back in here. Look at Apple. I mean, we just really launched here. Look at this. We're still up, up towards these highs. Look at Facebook. We have come off a little bit because we're not holding back above the 250. But right here with Facebook, and then with Google, we really took off here. Google, we've come off, but we're still trading up rather well here. So with that, NASDAQ or the NQs were not willing to go on and give much of anything. One of the things that also worried me, and I pointed this out to Blake, and this is really a thing of concern for me. Look at gold here. Now, when I was, at the time when I was talking about in Asia, I said, hey, look, gold's trying to break out above here. Now, I thought we'd be open for us to slide here in gold. And don't forget, yesterday the dollar was holding up relatively well. I mean, I'm saying is we hadn't gone back to the 93.17, but the low in FOMC there was 93.18. We hadn't gone back down there. I mean, we made a dip towards there, and I think we were trading at the time in the cash dollar index around 93.39-ish, around there. And you can see here gold looked like it was open to move lower at the time, at least in a little bit of a correction. But this whole thing about the delaying the elections, that really gave people some excuse. I even saw that. Of course, I mentioned it, but later on after I'd originally mentioned it, and I said, hey, that may take, if this carries on, we could see the dollar really fall off. At the time I said that, fall off a few figs, and the equities slide fall like a California mudslide, or pare back like a California mudslide. But I thought it was going to be over some time. Well, the dollar actually started fading, and you can see here when I was discussing this in Asia, we'd already come off of here. Look, this is 55, and we were already here at 85. We were pushing at the time. We were just pushing just a bit higher here. We'd already come off $30. We rallied $30 off of these lows, and these lows had come at around 11 a.m. During the U.S. session. Well, you can see here, now we've even pushed past the 2,000. Now, this is in the December gold, which is now the front month. It was previously in the August. There is October gold, but it's really the front month of the futures is going to be the December gold. But you can see here, we're pushing even higher. I'm like, I'm not going to stand in front of the way of the euro in a situation like that on a Friday. So anyway, that's the backdrop on what we're looking at here. Let me go on and I'll go on and move into the equities real quick and take a look at that. Bear with me one moment. So if you look on here in the equities, and we've been trading down here, and I was thinking, if they rallied up higher, this would probably be a good area. But thankfully, like I said, I tried to stay all patient. I had taken the scalp, I think it was in the European session yesterday, but I hadn't done anything. I said, I don't want to stand in the way of this thing. I'm going to let it go. Eventually it goes. I didn't know that the earnings would come out so well that we would not only challenge this area, we'd go past it. The problem is once we got up here to this 951-ish, we weren't really trading. You can see some little movement here, but overall, I was expecting some good back and forth action. We simply haven't seen it. You can see here in the NASDAQ on the 5 minute, once you got past these earnings reports, look, it's pretty much stayed here. Yeah, you can say, we pared back just a little bit. Look, with the earnings that we looked at in Google, Amazon, but also, yeah, did mention also Amazon, Google, Amazon, Apple. This thing is really holding up very, very well. And you may end up, shorting this, and then you end up getting your rear end run over. And certainly, like I said, where it's at right now, it's still holding up really well. So I'm like, I haven't been able to do anything. I thought I was going to be very active in Asia, and it wasn't other active than screwing around with the stupid computer's mouse. But anyway, that being said, eventually got that thing squared away. But you can see here, we're just not giving back here. And then, like I said, then my concerns with the euro and then gold now pushing higher. And on top of that, on a Friday, and one of the things I didn't mention or noted to in the chat with Blake, I'm going, this euro is going to have to pair back in Europe. It's going to have to pair back in Europe. Let me go back in here. We are starting to pull back a little bit in the euro. Let's take a look at it here. I was going to have to pull back in Europe because there's no way you're going to try and get this thing to pull back in the U.S. session if it's still sitting here above 19. Now, we have gone and come off. Now, this is on the 6E, which that's the euro futures, and they're only trading at an 8 pip premium rate, tick premium to the spot. So the spot right now is trading at 1870, and we're trading at 1877.5. Well, now 79. So it's only trading basically an eight tick spread to the spot. But you can see here that we're still holding it very, very well. If you shorted, you hung on, but tough to go and take the other side of this on a Friday. But if it's going to try and make a stand here, it has to make it during this European session. If it's above 119 or at 119 into the U.S. session, it's going to be hard for this thing to go on and pair back, as I would think traders would press it further. With that, let's go on and move on. And let me quickly go on and pull up the economic data here. So we did get Spanish GDP, which came in actually at negative 18.5. They're looking for negative 16.6. Italian GDP came in not as badly. They were expecting negative 15%, came in at negative 12.4. And then we'll move on to Eurozone HICP flash. They're looking for 0.2 gain. And then as we come into the States, we do have Italian retail sales, which is kind of late for that, but you can see here, 6 a.m. Eastern. Coming into the States, we will have personal income and spending, or what they call it. It used to be called personal income and spending. Now it's called, I guess over the last 2 or 3 years now, it's called personal income and consumption. With the core PCE and employment wages. And then we do have Canadian GDP. Sorry about that. We do have Canadian GDP as well as producer prices. So we obviously have a chance for Canadian currency to make a pretty good move. And then we have PMI, Chicago PMI, along with the final reading, though, on University of Michigan. So we have some decent little data that'll be hitting here during the U.S. session starting at 8:30 Eastern with personal consumption and personal income and consumption, as most refer to it now, and then obviously Canadian GDP and producer prices. This won't move it as much, which is final reading on University of Michigan, but we do have Shy PMI at 9:45 Eastern. Let's go and move on to the analysis, so bear with me. I thought I was going to be doing the webinar this morning from the MacBook, and that was going to be something else. Bear with me. So because, as I said, my mouse was all messed up, I did not get to do the Asian analysis. Although the whole time I was sitting here in front of the computer, I was staring at it, but I thought, okay, I'm going to get to it. I'll get to it. And then, as I said, then that's when everything locked up. Let's go and move into the euro right now. So you can see here that I had this resistance. I picked this up off of the weekly chart, 1937. That's what I'm seeing here at this point. You know, it's crazy to think about this is that on FOMC day, we were looking for stretches at 1814, could be 1827.54, maybe 1854. Once we got above that, then I'm looking like, okay, where am I seeing some kind of touches coming across here? And it really wasn't until 1937. And when you look at this, the high here was it 19, it's going just a little bit closer. Actually, we do have it here. 1909. To me, I did not feel comfortable with this at just barely taking out 1909. It has come off a little bit. We're here at 1864 now. We're kind of easing back a bit. I don't know if Blake ended up keeping his shorts in the Asian session. He had just said he wasn't sure if he wanted to keep him on. He obviously came in at a very good level. So I think he sold it at 03. I mean, he must have sold it like one pip, literally one pip or two pips from the high. But anyway, nonetheless, this is the resistance I have, which is this 1937. That's off a weekly chart. And to look for support, let's go and move into the 2-hour. You can see this thing kind of making a little hole here, kind of holding here, but I would look for a bigger move here if we were to come off, and that would take us to, I'm just going to go with this level here, which is remember we had the 1814, so we'll just call it, I'm just going to go with the prior weekly level, which had been resistance, which we'll say is 1814. I'm looking at the cash dollar index. That thing got as low as 92.54. Holy smokes. Let's go now move on to the cable. Mm-hmm. This is, I mean, I can't even believe some of these figures. I mean, with cable taking out 131. Yeah, and as I said, once again, apologies. I did not get to do the analysis in Asia when eventually the mouse would not even work at all. And one of the things I am going to order off Amazon now is a wired mouse. And I should have already had that as a backup because you never know. Obviously, and that's what happened. Which I found myself with no mouse. Let's go move into a daily. Alternate high there. That's 31.45. So 31.45. I can't even believe some of these levels here. 31.45. The high so far on cable is, wow, 31.45. So that we do have, that is a level there. Hold on. Right there. You see this close right there? Right there gives you 31.45. Doggone it. There. 31.45. Let's take a look here for support. This is unbelievable. It's just like a freaking helium balloon. The low here is 30.81, and the high off of this bar is 30.71. 30.71. So bias chart support will be 30.71. Excuse me. Let's go move into the Aussie dollar. Looking at the Aussie, we're finally starting to pair back. Let's go on. And this thing had even moved to new highs in Asia. Let's go and take a look here on the daily. Well, it'll be interesting if we close here, but the day's still young. That would be a small gravestone doji after a hanging man. And we did finally pierce above 72. But those stupid tweets from Trump, that's what really got this dollar on the offer, or to extend it. This level right there is 72.45. Comes at 72.40. Let's go on to the 2-hour chart. And support would come in right there. 71.77. Well, actually, it's a little bit lower with these touches right there. 71.60. 71.60. $71.60. And let's go move into the Kiwi. I can't believe the way this Nasdaq is holding up really well too. Um, it's not giving back. I'm glad I didn't stand in the way of it or try and step in front. Okay, resistance is going to be right here at that level, which it didn't get to, but that's the resistance we had for FOMC, which is 67.35. I think our list was actually at the time 67.36, but we'll mention 67.35. Let's go move into the 2-hour. Goodness. Well, you can see where all the touches come in here. I just was concerned this wasn't low enough, but that is where the volume touches are, which is going to be right there, 66.52. We'll move into the dollar CAD. Now we have seen a nice little rebound here in the CAD. You don't see it as pronounced on the daily, but we did saw a nice move here. Now we had 34.23. We definitely pushed above that in early U.S. trading yesterday. Let's go and take a look on the 2-hour. See if we can get something more a bit more defined as far as resistance. We had 34.23, but we even pushed beyond that yesterday. Look at that. We got up as high as 34.60. I mean, this is holding up fairly well considering where the buck is. And I think that if the buck could find some footing at these lower levels, we could push much higher. We're just going to go at this level. Ultimately, it's going to be up here, but this level right there, which comes at that high, which is going to be 34.58, is going to be the resistance today. I don't necessarily see the dollar completely turn around to spark a further rally, but anything's possible. 34.58, and then support, you can see right here coming across here, is going to come in at 33.75. Let's go into the dollar peso. This has held up relatively well also. And we've seen a nice little turnaround here in the peso. Yesterday we had resistance at 22.20, and 22.20 has held it up nicely. and support at 2180. On this pair back, this is going to be support. We actually held here at 22, but we'll give it a little bit of room just in case, which would be 2196. And on the upside, right there. Yeah, right now the guy was just saying on the squawk, Apple, Amazon, and Facebook up 5% in after hours or pre-market, however you want to look at it at this point. I guess you could call it pre-market, since we'll be opening up a little bit later on. But this Nasdaq, holy smokes, look at that! You see? I mean, if you step in and try and sell this thing, you just, if it moves any higher, you just have to get out of the way and cover. So why are you going to try and step in front of this train when these, we can always go back to this a little bit later on, but when these other ones that with the news, Apple went for a 4-for-1 split. I thought I was going to be active like bananas during the Asian session and end up, not doing a doggone thing except dealing with this stupid computer, but thank God got it going. And I tore the garage apart looking for those stupid extra mouses. I was so mad. I found the mices, but I didn't find the little, what do you call it, the little USB key, because they're all wireless mouses. One of the things I'm going to do is be throwing all that stuff away. Made me mad to find all those. I think I found like 3 different mice, but not one USB key for it. Anyway, that being said, resistance is going to be right there, which is 2230. And let's go move into the dollar yen. Mm-hmm. Well, we had our resistance. We kept our resistance from yesterday at the 452, even though the dollar yen had looked like it was still holding above that. But we did. But I tell you what, we went even lower. Now we didn't go. The next area of support was 408, so it didn't make it down there. But it certainly took out that 452, and it has since recovered. Support on this downside is going to be right there at 423. With resistance is going to be right there at 522. And let's go move into the cash dollar index. Well, I even had a secondary support level, 92.89. They went right through that. Let's go and take a look at it on a 2-hour chart. The only thing we can say is I'll just go with 92.50. It's not out of the realm of possibility, although the euro is weaker, that we could see things turn around. Although we've probably gotten as high with the euro, but as I mentioned before, it wasn't like as if a lot of volume blew out, and we've just been trickling. slightly lower here in the euro. So we may now have the the high end so far, but certainly nothing that I could say, wow, that was a good high, meaning we blew out to about 1930. We saw a lot of volume. That just simply wasn't the case. So support is going to be 92.50. And on the upside is going to be right here at this level, which would be 93.40. There'll be some here, but it's really 93.40, which is where the resistance is going to be. And with that, let's just go and move on to the cross rates. Well, we're still trading relatively quiet here in this Kiwi yen. For yesterday, we had our bias chart support at 69.44. We have been as low as 69.52. We'll keep the 69.44 and the upside 70.07. Looks like we've been as high as 70.20. This thing hasn't moved very much at all. We're going to go with the low off of this bar. You see that right there? And the low there is 70.19. Let's go on and move into the euro yen. We had 24.33, but you can see here we made it up to that key level here at the 24.33. Our previous our resistance for yesterday was 24.01, but we've made it up here to this 24.33. That's what we're going to go with for bias chart resistance. And we'll move into the 2 hour for support. And support, we're holding up really well, so it certainly doesn't look like it's going to slide anytime soon, but this is where support will come in at. It's not that far away either, 23.73. Let's go move into the euro odd. So we had 64.79. We've already punched through there. Let's go move into a 2-hour chart and see a little bit closer levels. You can see the resistance right there. Almost a tweezer top. It's going to be right there on the body close, which is 65.34. And onto the euro Kiwi. We're still pushing up here. Let's go move into the 2-hour chart. Right there off of the slow, which is 77.95. And support if we do pull back. That's a long ways down here. It'll be good right here. 76.91. 76.91. And we're holding up really well here with the Aussie yen. Right there's going to be 75.82 for resistance. And support, well, that's pretty clear here on this level, 74.83. We're still powering along here. Obviously, the pound's been strong. We're still powering along here with the guppy. Resistance, we'll just go with this bar right here, the high off of that, which comes in at 37.76. Wow, hard to imagine we've already run it there, but 37.76 would be resistance. With support, we're just going right here with this level here and keeping it simple. 36.56. It's a nice little rebound here on the 2-hour chart. I don't know if it's going to extend up to this level again, but this would be the resistance here on any rally, which is going to be 82, 87. It's not that far away. With support, right here at this level. I'll pull this back. There you go. It's actually going to come in right there. That is a long ways back. We'll go right here with the touches on this little ridge, which is going to come at 81.51. Still a ways back. 81.51. There. Now I want to go and take a look at the gold market. This is my concern with the dollar. Now the euro is lower, not a whole lot lower, but at least it's lower. But this is a concern. I would bearish the dollar, but I thought it was certainly open or amenable to a pair back. But when the dollar went on the offer, as we got later in the U.S. session, we started pushing higher with gold. And by the time we were in the Asian session, we were already $30 off the U.S. session low. And look at us. We've already gone past 2,000 now. And we're coming into the close on a Friday. So we're still keeping the bid open on this thing. It's still open and moving higher now. In light of that, we're not that I saw necessarily a big pullback, but I thought it was certainly amenable to a pair back. Well, look where we're standing right now. And this is one of the concerns I've had now. Obviously, the weakness of the dollar has aided and abetted that, but nonetheless, there we go. Take a look here at the euro on the 30-minute chart. And I'm just looking at the futures here. And you can see we're starting to come back some, and I just say some. It's not really a whole lot. I mean, if you look at the absolute high we put in, and we're easing back, and we're into a little bit of support area here. But once again, coming into Friday, I just don't know that this thing's going to turn around and fall apart. I think it was open that, but then when the fool started tweeting about delaying the election, it really, I wouldn't say it spooked the dollar, but it may give the excuse for the dollar. And technically, that was my case that was mentioned to Blake in the Asian session. Not that he didn't know it, but I mean, not only that, but we're already breaking lower in the dollar to start with. So it really was amenable for them to kind of like step on the gas a little bit. And you saw them do just that. You see that? Would look like what you see right here. Right here, it looked like the dollar was, the euro at the time was open to paring back. Okay, you can see here, we even have a little bit of a gravestone doji. And then those tweets come out, and then you can see we just start moving higher and higher and higher. And it's just like nobody can get in the way of it. It just keeps pushing higher and then pushing higher. And then we get, it looks like a little bit of a gravestone doji, just a little bit. And then we push another a little bit higher. Now we're coming back a bit, but there is some support level right here. We're just below it. Like I said, I don't want any part of it on a Friday. I'm just not going to stand in the way of a train. Like I said, had we had blown way up here and on the spot gotten up to about 1935, 1933 and pared back, then I'd say, okay, now I feel more comfortable. But to me, especially with gold pushing higher, it's just too easy for them to come back. It doesn't look like they're going to turn around and rally back up to new highs, but could we gather here and then start to move back higher again? Possibly so, or potentially so. And I don't like that setup. I'm not going to stand in the way of this thing on a Friday. I'm not going to hold this thing over the weekend, and why I don't feel comfortable at this point with that. So that's my take there with the euro, and a little bit to look at gold. To finish up things, look at Apple. Look at this after earnings. Look at this run up we saw. And also they did a 4-for-1 split. So you can see this thing is just not giving back on these gains. This is on a 2-hour chart. Look at this. This thing is just taken off. And at the time, what we were trading around, 376, we're at 409. So up like $33. Taking a look here with Amazon. And here's on a 2-hour chart. And we saw a pretty nice rebound there. And we're still doing very well. Okay, so we were trading around, maybe around 3,024. So they've already rallied $200. $200. And look at Facebook. Facebook, the key level there is 250 on this Facebook. We're just under that, but as long as we can hold up here, that's still very, very strong. We were trading around around 230, and we're trading at 248 right now. And then look at Google. Google did pare back, but it's still holding it relatively well. So with that, or should I say in light of that, good luck trying to short the NASDAQ. I mean, it's not adding even further, but it may when we open up the U.S. session. But look at this thing. I mean, so I'm over here with my hands in my pocket, or hands in my pocket fooling with this doggone computer when the mouse went down. But that's it. That's what we have. I'll get the chart posted. Thanks for joining us. Sorry for the delay. Like I said, it seems like it's not one doggone thing, it's another. But yeah, I spent late last evening, yesterday, tearing stuff up in the garage looking for mice. Found the mice, but I didn't find the USB connectors for those wireless, so I'm going to order me a wired mouse from Amazon. That'll be my thing to do this morning. But thanks for joining us here on the European Crossover webinar. I'll get the chart posted, and we'll see you in the chat room.